The United States is facing one of the most severe housing crises in its history. For millions of Americans, buying a home has become an unreachable dream, while renting now consumes a dangerously high portion of monthly income. Home prices continue to rise, mortgage payments are becoming unaffordable, and housing supply remains critically low. This crisis did not appear overnight. It is the result of years of economic shifts, policy decisions, market behavior, and structural problems within the housing system. To understand where the market is headed, we must first understand how it got here. Today, we break down the top 10 causes of the U.S. housing crisis. Rapid population growth in major cities. One of the foundational causes of the housing crisis is population concentration in urban and high-opportunity regions. Cities offer better jobs, education, healthcare, and lifestyle options, attracting millions of Americans and immigrants. However, housing development in these areas has not matched the pace of population growth. As more people compete for limited housing, prices naturally rise. This demand pressure leads to overcrowding, bidding wars, and skyrocketing rents, especially in cities like New York, Los Angeles, San Francisco, and Austin. Long-term underbuilding of homes. The U.S. has not built enough homes for more than a decade. After the 2008 financial crisis, many builders went bankrupt or dramatically reduced construction. Even as the economy recovered, housing construction lagged behind demand. Over time, this created a massive supply gap. Experts estimate that the U.S. is short millions of housing units, and this shortage continues to push prices higher every year. Rising construction and labor costs. Building homes today is significantly more expensive than it was in the past. The cost of materials such as lumber, steel, cement, and appliances has increased sharply. At the same time, labor shortages in construction have pushed wages higher. Permits, inspections, and compliance with building codes further raise costs. Builders pass these expenses directly to buyers and renters, making new housing unaffordable for average Americans. High mortgage interest rates. Rising interest rates have dramatically changed housing affordability. Even when home prices stabilize, higher mortgage rates increase monthly payments. A home that was affordable at a low interest rate becomes unaffordable when rates double. Many first-time buyers are now priced out of the market, and existing homeowners are unwilling to sell because they don't want to give up low-rate mortgages. Corporate and investor home buying. Large investment firms and institutional buyers have increasingly entered the housing market. These investors purchase single-family homes in bulk, often paying in cash and outbidding regular buyers. Many of these homes are converted into long-term rentals, reducing the number of homes available for purchase. This trend drives prices up and turns homeownership into a competitive battle between families and corporations. Expansion of short-term rentals. Short-term rental platforms like Airbnb have transformed housing markets in many cities. Homes that once housed long-term residents are now used for vacation rentals. This reduces housing supply, especially in tourist destinations and major cities. As supply decreases, rents rise, and local residents are pushed out of their neighborhoods. restrictive zoning and land use laws. Zoning laws play a major role in limiting housing supply. Many U.S. cities restrict construction to single-family homes, preventing apartment buildings, duplexes, or multifamily housing in high-demand areas. These rules make it difficult to increase density where housing is needed most. As a result, cities remain locked into low-supply systems that drive prices higher. Wages not keeping up with housing costs. Housing prices and rents have risen much faster than wages. While incomes have increased slowly, housing costs have surged, forcing many Americans to spend more than 30 to 50% of their income on housing. This imbalance leaves little room for savings, emergencies, or retirement planning and pushes families toward debt. Decline in affordable housing development. Affordable housing programs have not kept pace with demand. Funding shortages, long approval processes, and community opposition slow down affordable housing projects. As a result, low- and middle-income families struggle the most. The lack of affordable options pushes people into overcrowded homes, long commutes, or homelessness. Structural housing supply shortage. The single biggest cause of the U.S. housing crisis is a long-term structural shortage of homes. For years, the U.S. built fewer homes than needed, and the gap continues to widen. Without a significant increase in housing supply across all price levels, affordability will remain out of reach for millions of Americans. The U.S. housing crisis is not caused by one problem alone. It is the result of years of underbuilding, rising costs, restrictive policies, and economic pressures all colliding at once. Until supply increases, wages improve, and policies adapt to modern realities, housing will remain one of the greatest challenges facing the United States. Understanding these causes is the first step toward meaningful solutions.